All right, you clicked on this video to see the cheat code in the stock market, so we're going to get right into it. No wasting time. I'm going to show you what I mean. So basically, I'm talking about stocks overcutting and undercutting. And I'm going to give you an example right now. So if I go on replay mode, right? Looking at the stock HYMC. So as you can see, this stock broke out, right? Broke out over this resistance this day. And now we're consolidating, right? I want price to undercut the previous day low. Let these resting orders down here get filled from the people that didn't get filled over here. I want them to get filled. I want it to bounce off the moving average. I want it to reclaim the previous day low and then continue higher. And on that reclaim is my exact entry. So if you scale down to the 5-minute time frame, right? As you can see, you wait for price to get above the previous day low, right? Undercuts it, gets back above the reclaim. The reclaim on a 5-minute candle closure is your entry. So you'd enter right here, stop loss, somewhere back in this range, maybe below this consolidation period right here. And then you're obviously targeting all these highs. You go to a daily time frame and you are targeting, let me see here so you can see this. You're targeting this high over here, so that's a TP. And you're also targeting these highs all the way up here. I would say that my next trim would be right here. So let's, again, play this and see if this trade idea worked out. And what do you know? It did, with flying colors. Now you see these undercuts work perfectly. It's basically just protecting yourself because instead of buying these stocks at these highs, you're buying it at the low with a tight stop, which is the best risk to reward ratio that you could possibly get. And then you're banking. So if this is a 20 risk to reward, this trade right here. That means if you were to put $1,000 into this trade, right? And that stop loss was you risking, let's just say 10%, right? So you're risking 10% of that $1,000. So you're risking $100 on this trade, right? So if this trade is a 19 or 20 RR, you times your risk by whatever risk to reward ratio that is. So you're going to want to times that by 20. So you're risking $100 to make $2,000 on this trade. Like, come on. You cannot beat that risk to reward. You can't. You literally can't. The same thing goes for the other direction. If you wanted to short the stock, you look for a overcut of the previous day high, bounce off the EMAs, reject to the downside, and then when we reclaim that previous day high, but to the downside, that is your entry. This is literally today. This is a trade from today that I alerted to my Discord. I let people know to take this, and what do you know? It worked out. So look, I'm gonna show you exactly what I mean. Take this off. You mark these out, whatever that may be. Stock's clearly in a downtrend. We're trending down. We're rejecting off these moving averages, right? You wait for a price to overcut previous day low, reject, go downwards. That is your entry. So look, we're on a 1-minute time frame, right? Wait for a price to overcut previous day high, reclaim back to the downside. I probably wouldn't have entered on this big red candle right here. I'd wait for a pullback, so basically like a break and retest type of thing. So off this rejection, off this 20 EMA is exactly where I would have entered. Then you short it here. Stop loss, I would say back above the 10 EMA because the moving averages are your best friends and they work very well. And look what we did. Look what we did today, fellas. Look what we did. Now, targets. Where do I want to target on this? I would want to target where we opened on the previous day on this candle right here. I would want to target those lows right there. So again, scale to that. That green line would be my target. Bang. I'm out right there, right when I hit that. This is a 9.5 risk to reward. Let's just say it's 9 risk to reward. Again, if you go in with $1,000, what do you make? You're risking, let's just say this is 10%. You're risking $100 to make $950. Come on. Like, it makes so much sense. Like, why wait for it to break these lows all the way down here, short it, and then just for it to reject and come back up? Because the market has been going up, down, up, down, up, down. So you have to catch it at the high, for it to go down to hit that downside move. You have to catch it at the low for it to go up, and you'd hit that hit that upside move, right? You don't want to buy it at the high and reject and go back down. So hopefully this little video helped. Hopefully I explained it all good. If you have any questions, just comment it, do whatever you want. I'm going to make more of these little, just, I guess, tutorial videos. Maybe I explained it weird. Maybe I didn't. I don't know. I will link my free Discord in my bio. It is completely free. I alert all my trades, all my exits, my entries, my stock watch lists, my market analysis, what I'm thinking, you know what I mean? And it will not be free forever, but it is free for now in the foreseeable future. You know what I mean? It's obviously has value, so it's going to cost value someday. So